Good morning, everyone, and welcome to the Quantum Leap pre-market analysis and trade plan setup for Tuesday, December the 3rd, 2013. Want to welcome all our guests in from Twitter, and if you're watching on YouTube, Quantum Leap is a self-organized learning environment. We run a private Skype room. It's a Skype chat. We do daily analysis and trade level setup each morning at 8:45 Eastern Time. If you're interested in coming in and checking out our Skype room, my name is Doug McKay. You can send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Or you can send me an email at dm@m4connects.com or call me on my office line directly. Please call me after the market hours. So each morning we come in here and we take a look at where we are within the auction and see if we can find the levels that we want to trade off of and prepare ourselves for trading each day. If you're watching on YouTube, we start with some very basic key numbers, macro to micro, and some macro to micro trending charts, which are just basic. That's to make sure that our perception is not, or bias is not in the wrong direction. But it is very simplistic, so you might want to skip ahead to some more in-depth chart analysis later in the homework session. But I need to get the legals out of the way, so let's get that done. This information for the purpose of educating members who want to expand their knowledge of the business of trading is not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk of loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that we may put on in Quantum Leap are for education purposes only. Please do your own due diligence and trade your own trade plan. So let's start with the numbers. Of course, we're still dealing with this 18-12-50, and Howard and I were talking about how great that that rule of 10. Anytime you hit a centennial number on any instrument, typically you'll get a push through to a 10% push through, or 1810. Of course, this played out beautifully with the break of 1800. Nothing really jumps out at me in terms of the month. We've got a month high so far, which is only one day old at 1809. Our month low is 1797. That's now been broken. We actually went down, and if you go back to yesterday's video or yesterday's chart, one of my extended targets below was that 1794. We came down to the 1794 overnight and have found balance. Of course, we were following a neutral day yesterday. Neutral often begets neutral. Usually you'll see consolidation and neutral days come in clusters. You can see that it happened again yesterday. Globex open, and the week open yesterday was 1806.25. We had a high of 0775 and a low of 0175. That 0175 happens to be our overnight high tonight. And then we opened the RTH session yesterday at 1805.50. Had a pretty tight opening swing. Nothing really, we had a higher 1230 number, but we had a lower VPOC and lower close. And we've seen a little bit of weakness come in, but nothing really jumping out at me. We did have lower value. We had a lower value area high at 1808.50 and a lower value low at 1801.50. Let's take a look at our daily report. Full session high so far in the Globex, 1801.75, 1793.25 was the low. So our full session ATRs, this is a calculator that we use based on the 20-day average true range to give us what our possible range will be for the day, and we do it on the full session, and then we do it again once the RTH opens. And so far we've got a ATR target above at 1807.60 and an ATR target below at 1787.50. 40, and that's right just below a key number for me, and my next destination below, if we break 92, is that 1788.50, which is the microcomposite VPOC, so the balance that we broke out of to the upside in the last couple days. There's no real big news today. We've got economic optimism. I mean, the big news is all tomorrow. Tomorrow we've got non-farm, we've got trade balance, we've got Canadian trade, bank rate, overnight rate, ISM, PMI, crude, beige book. We've got lots of news tomorrow, but not much today. So we don't have any impetus to make a big move today. Let's take a look at the macro to the micro in terms of trend. I always like to start with the monthly. You can see that the monthly, very strong, good slope and separation on the 9 EMA and the 20 SMA. We've traded above the 9 EMA all year long. Very strong trend on the monthly, actually. Strong trend for the last 2 years. Going to the weekly, again, same thing. We've got good slope and separation. We've got a little bit of a tech gap going on here. Probably come down and close this tech gap just like we closed this one and this one. We're getting a little bit of further away from the 9 EMA, and probably going to close that somewhere, I think, in around 88.50. Going to the daily, we've got our first move below the 9 EMA, so we're currently trading below the 9 EMA, coming down to test the 20 SMA. Again, I think that's all going to happen in around that 1788, and we'll take a look at that on the volume profile chart. Going over to the geometric chart, long-term upward sloping fork, and then the medium term that we've been following for weeks. I've now added, last week I added this new modified shift fork. We're currently coming back in, and we've come down and we tested the upper line of the longer term upward sloping fork, and we're breaking inside. We're coming down off of the upward fork that I added last week and coming down to test the center line of that new fork. That center line test will bring us down to 1790.50 area. And then, of course, we are getting back below the center line of this midterm fork and getting inside to the lower channel. We do have an energy point down here that I find kind of interesting because it is on the longer term forks down here at the 1750, but it's showing December the 6th, and I don't know if we have enough time. If we have a big sell-off, we could get down there by the end of the week. So that, to me, would be a weekly range target below down there at 1750. But my hypothesis is not to get that low this week. Let's take a look at where we are in the trend on the intraday basis. And why this is doing this to me on the 4-hour all the time now. Sorry. Let me just
double-clicked on the scale on the right.
It doesn't work for me. There's something wrong with my 4-hour chart. I always have to come in here and manipulate it. So we've basically come up on the 4-hour, and we've been consolidating in this area, and then just overnight, yesterday afternoon, late afternoon and overnight, we have started this strong downward trend. You can see we've got slope and separation on the 9 and 20 to the downside. We do have a naked cross here at 1805.50, so if we get back into the 1800s again, that would be my initial destination and target at 1805. And remember, that 1805 was a measured move before we even got into the 1800s, and that was one of the first areas we were looking for the market to hit after we got into the 1800s. So the trend so far on the 4-hour is looking to the downside. Let's go down to the 30-minute. 30-minute, you can see Again, same thing. We've been trending pretty strong down. We kind of consolidated in around 1800 as they were trying to hold that 1800 level, and then once it broke, we started trending down. We created a technical gap here on the 30-minute, and we've just come and closed out that technical gap. We're tested the 9 EMA from below, but we've got slope and separation, and we've rejected the 9 EMA and trading below it so far. Let's go down one more down to the 5-minute. And the 5-minute, we've come down into this 1794 area. And we're finding balance. And, again, that was one of the areas that we were looking on the composite as one of our targets below was the CHVN. But more importantly, it is the value area high from this former microcomposite balance area that surrounds the 1788.50. So, we broke out of the balance. Below, came up here, consolidated, accepted value, made a move higher, put in the new high, tried to hold value up around the 1804.75, and then we fell out of that balance and we came down, and we're currently trading and testing the value area high and the CHVN at 1794 area. Key line for me today on the short side is going to be the CLVN at 1792. Excuse me. Not only is it a CLVN, it is also a microcomposite LVN within the range from that microcomposite. If we get inside and below 94 and we break through 92, my big target below is at 1788.50, with the other side of the balance being down here at 82.25. You do have a bit of a CLVN here at 86.25, but the big number below is going to be this 82.25. And the reason that would be is we'd be breaking below the 83.50, which is the value area low for this microcomposite. And if we get through and outside of balance and break through this long-term price rejection, I think our next destination is an attempt to get inside the range of the prior balance area and go down and target the 1778.25. And then the value area for the next level below us is all the way down here at 1769.75, which is just below this CLVN at 1770.25. And then the last most accepted price before we launched up to accept value at 1788.50 is the 1767.75. But right now, we're trading above the 1792 and around this 94. Our close yesterday, excuse me, is at 1800.25. So we do have a naked close up here. We've got a CHVN at 99.75 and 98. With 95.50 being the other side of the balance around this 94. So if we hold 92, I'd be looking for a move up. First resistance is going to be this 95.50, and if we break through the 95.50, then I'd be looking for a rotation up to the 96 and 98, but a move to close out this this gap at 1800. So we're going to open auction out of range. And I'm going to be using this 92 as the defining line, and I'm going to be looking to get long if we move down on the open and test this 92, and responsive buyers step in. I'll be looking to get long there, and with a push up through to 94, other side of balance at 95.50, and then a move up through 96 and through to 98 and close the gap of 1800. And you've got that CLVN at 1875 that is below us. So that's also a key LVN from yesterday too. So let's take a look at yesterday. I'm going to take my numbers off. You can see that this 94 was the target just below that 96 yesterday. So I'm going to take all these lines off so we can redo them. I forgot to take them off. I apologize. Just let me get them all off. Oh. Sorry about that. All right. So you can see that this 1875 is also the key LVN from the double distribution that we created. You know, you got a little bit of a third distribution up here, but really the majority of the distribution yesterday and trading was done between those two levels that we were talking about, 1800 and 1807. And our main hypothesis was to come down, test that 1800, and then chop in around the 0675 and 1875 with a possible poke through to go up to take out the naked VPOC at 1810.50 or go down and hit 96 or 94. That was our main hypothesis. It played out to a T yesterday. So let's get our numbers over from overnight. We've got overnight high at 1801.75, which is right there at the value area low, and then 1793 and a quarter. We could get a lower low coming in here. We still have a half hour and we're trading 1793.75, so we'll have to make adjustments accordingly. And then our overnight VPOC that is not likely to change. Well, lo and behold, where is it at? 1794. So they went down and hit that target, and CHVN found balance at previous balance at 1794. Okay, so we're going to open out of range. I'm going to be using 1792 as a defining line in terms to get long. So if we come down here on the open and test this 92, I'll be looking for responsive buyers to step in, take us up, rotate us back up into the current balance around 94, push through to that 95.75. Sorry, 95.50. That will be the other area that I'll be looking at. And if we get above 95.50, then I'm looking for them come to make the move up into test the range low from the prior day at 1797 and go up and hit that 1798. But the big one will be coming up into this lower distribution area. The HVN for that area is 1799.75. But the big number will be the close at 1800 and a quarter, and of course the centennial number. And then of course you've got the 1875 just above. That's going to be the next area that I'll be looking to do business here. If we break above that, I'd be looking for a push through to test the value area low, take out the overnight high. But considering that we're now breaking down, we're just coming down to that 92, we have a new overnight low. We're making this move to test that value area, or sorry, CLVN, the other side of this balance. If they break this, watch for a quick move down to that 1790.50, which is the first CHVN below us. But the big move will be down here to the 1788. So I'll be looking for a target and a move down here to the 1788.50. 90 and a quarter is going to be the initial, 90.50 I should say, is the initial target below. And then I'll be using the 1788.50 as a bounce as well. So not only will this be a target, this will also be a area that I'll be looking to. And I don't usually enter my trades at areas of price acceptance, but because of the fact that we're expecting buyers to find value here, I'm anticipating a bounce. Once we get down to 1788, I'm expecting a bounce, probably as high as going up to test that 90.50, possibly test the CLVN from below at 92. as well. So I will be doing business, so this is also not only my main target below, but it's also a trade area. And then the other area below that is going to be this 1782 and a quarter, which I'll be looking to trade from as well. Above us, if we stay above this 92, we've got the 95, then I'll be looking at this 97 to see how they handle the range low, but I'll probably already be long off of 95.50. And then, if they get above 1801, and get through into value, look for them to go and take out the naked VPOC at 04 and test the the value area high up here at 1808.50. This will be the other area that I'll be looking to do business, is right in, not target. Basically between the LVN at 1807.75 and 1808.50 value area high, with the possibility of breaking out of the 1809. We still have that naked cross up there from yesterday at 1809.75. We took out all those naked crosses on the upside and the downside yesterday that we were looking at. And of course we've got the naked VPOC at 1810.50 and the all-time high and range high at 1812.50. This will be the extended target above. So let's look at our naked crosses that we've put in overnight. Not a lot. We've got one at 1809.75 that we already had from yesterday, and then we've got another one at 1805.50. Come on. Let's do it this way. 1805.50. So, and that's right at yesterday's open as well. So let's take a look at what it looks like on the Renko and Keltner chart. We've been, coming down, and we're walking the long line right now. We're getting a possible Renko reversal. So we're currently trading at the lower line. A move back up to test the Keltner center line is going to be 1798.50, right there at around that 98. And then a test of the upper Keltner line, 1804, is going to give us the takeout of the naked VPOC. But currently, right now, we've got a possible Renko reversal setting up, and then if we get a Renko reversal and we come down here and attack the line below, look for a walk the line down to that 88.50. So that's a possibility coming in before the open or just at the open. So keep your eye out for this possible setup, because if we do break through that 92, I think it's going to be a quick move down to that 88.50. So that's what I'm looking at. Howard, over to you.
Thank you, Doug. So taking a peek back at the daily chart, we set our high of the year back on the 29th of November and formed shooting star / gravestone doji / 1 tick from becoming a key reversal candle. We closed right at the low of the previous day, 1 tick lower, which should qualify as a key reversal. Then yesterday we had a bearish engulfing, where we came down and tested the 9 EMA and gave a slight rejection, and then overnight we tested below the 9 EMA and gone roughly halfway down to the 20 SMA on the daily. So key level will be whether this 9 EMA support is broken, we close below, or whether we start rejecting and close above. Now let's go take a look at our market breadth. We can see, since we bottomed on the advanced decline, which is the middle chart on a 10-day average basis, and up versus down volume on the lower chart. We bottomed on both of those at the 7th of November, and we started increasing market strength. As you can see, we topped back on October 22nd, and since then we've seen a significant divergence between market breadth and price, which continued higher. So, the key here is, have we just done a retracement in terms of market breadth? And we can see the last few days we've turned back lower. In fact, NYSE in blue has actually come below this 50% level, which is break even, where advancing issues would equal declining issues on a 10-day average basis. NASDAQ still has been a bit stronger lately and is above. And that's the same case for up versus down volume below here. So if one scenario plays out where breadth continues to weaken and we continue to go and break a lower low here, that indicates that this move higher was a simple retracement of a longer pattern. If instead we eventually come back up and set a higher high, then that indicates that we had a divergence here, and didn't really get much of a consolidation in price, but we'll just have to see how action plays out here, and whether prices keep moving as we go into a seasonally strong period in December. But if we continue lower, then we'd be looking for at least some consolidation here, if not a temporary turn down in the market. So let's look at our sectors. And we can see that the majority of the sectors have started turning a bit lower. Healthcare in red here is flat. Financials mostly flat. The utilities have been in a downtrend since back here on 15th of November. And like home builders has turned back lower after rallying back here since the 8th of November. So I'm not really seeing any sectors that have moved higher, but we're starting to see sectors starting to go flat to lower. Our unbalanced volume. Just like we saw in advanced declines and up-down volume, we're seeing non-confirmation and a bit of divergence here. We've had a high and unbalanced volume set on 11:15, which is up here. We've gone on to set higher highs in price. We're using the SPY here. Lower highs on unbalanced volume. So we can see that on-balance volume had been with price up until about here, which is the 15th. Since then, the volume supporting the price increase has not been in sync. We have a little divergence here. So, between advanced decline, up-down volume, on-balance volume, we're seeing that the market breadth is thinning in terms of leadership taking price higher. in the last push in the market. So one last thing here, we did get a COT report released. Yesterday. Bring that up here. Alright, so here's the COT report. The red line represents the ES price, yellow represents small specs, blue represents large specs, and maroon represents the commercials. So we can see back here on 5th, large specs have actually been reducing their long position, and over the past week they increased it slightly. So they are just barely net long by about 60,000 contracts. And we can see up here the small specs had been long back on September 17th, and they've been since then reducing their long position. Of course, in the process of doing that, they've been going opposite the market, which is typical for the small specs. You can see over time, market goes down here, small specs are getting longer, market starts rallying, small specs get shorter. Same here, we get a turning point, market goes lower, small specs go much longer, and then as the market turns almost right to the day, the market starts going higher, small specs get shorter. So you can see that through most of the activity here, the small specs are opposite. You can see that blue large specs largely are going with the market, although they've been kind of diverging since right about here on July 30th. Well, actually, they've been okay with the market up until the last few weeks. I'll take that back. So they've been actually getting a little bit less long. In fact, the small specs and large specs are barely net long now. This line here represents the break-even between being long contracts and short contracts. So both large and small specs are just slightly net long, and the commercials are net short to make up the difference. But overall, we can see all three groups together are almost neutral in terms of market outlook. So that's the latest COT report. We have 12 minutes to open, Doug. I'll turn it back over to you.
Thanks, Howard. All right, so let's just take a quick look at gold. Gold continues to be weak. We talked about this this 1229.50 yesterday. If we broke below, our two targets were 25 and 15. I didn't quite get down to the 15, but we are testing the lower distribution of the microcomposite here now, and if we break through the range low, I'd be looking for a move still down to the 15, with the other side of balance being down here at 1213 and a quarter. And if we blow through and get below the 1230.20, the big target below, as I mentioned yesterday, is down here at that 1203.50, where the buyers and the market participants accepted value to make that big move up. This was this 1203.50 was the last most accepted price before we made that huge run above, and I anticipate that the buyers are going to try to step in. Remember, the last dip below, we went down to this 1171.80 area. Was it 1171? Yeah, 1180 area was the last dip down here, and if we get below the 1200 and get back into the 1100s. The two targets that I'm looking at is this 1190-170 and this 1171-80. With extended target down here at 1160.80. If we continue to hold above this 1213.20, look for rotation back up to the 25, test the value area low and the CHVN in around that 3260 area with the main target above at 1246. Gold's got to find some buyers and hold value, or the slide is going to continue again. And I think if we break below 1200, I think that's a major psychological point, and we'll get a much bigger retrace down into the mid 1100s, and possibly even right down through to 1000 area. Anyway, that's going to conclude our morning session. I'm going to go ahead and close the room down and then open up the live GoTo for Quantum Leap Level 2s and 3s. As always, have a safe trading day. Trade well, trade safe, and we'll catch you on the flip side.